The last time we spoke, you're clearly bearish on your view of the global economy and the global markets. How does this factor in now? How does that change that view, if at all, the terrorist attacks, that is?
I haven't changed my view. I think what we have is in the U.S. Stock market that is basically, if not fully priced, then overvalued, given that the earnings will rather come down. And around the world, we see a slowdown in economic activity. So overall, I'd be rather cautious about investments in equities. However, over the last 12 to 24 months, many sectors have had huge declines. Say you take gold mining shares, since 2011, they dropped 80–90%. And so this year, they had a strong rebound. Many gold shares are up close to 100%. And I think what will happen is that the market will turn into more active management of equities, in other words, away from index funds. And that will favor managers that take advantage of sector strengths. We also had this year, say, Malaysia, Thailand, Indonesia. These markets are up in dollar terms between 9 and 12%. So different sectors will move at different times.
Sure.
And I see here and there some opportunities.
What are the opportunities in your view right now, Mark?
Well, I think that in Asia, the sentiment turned very bearish at the end of last year, and especially concerning China and the Chinese economy. And as a result of that, Macau gaming companies, casinos in Macau, got slaughtered. And now they are, in my view, at a relatively attractive level. They started to move up. Sands China, Wind China, and so forth. These equities are, in my opinion, quite attractive. And I still feel the mining sector has embarked on a new bull market.
Hey, Mark, it's Tim Seymour, and I just want to ask you a question because you've been so bearish for so long, and you're talking about constructive things you see in China, and yet the rest of the market public largely thinks China is one of the biggest issues out there. Where are you now versus where you were in 2009 on China?
Well, in 2009, we had just gone through a recession, and actually I turned quite bullish about China in 2014 before the 100% rise in Chinese equities. Now that stocks have again declined very substantially, I have to say, given the size of the country, and given the variety of different sectors, there are some opportunities from a longer-term perspective. I don't think it's a bargain by any means, but I believe that China, despite its near-term problems that could be very substantial, will, in the long run, be a rewarding investment destination.
Mark, you had mentioned gold miners and your belief that this is a start of a bull market for gold miners. Does that necessarily mean that you're also bullish gold itself, which has had a nice run year to date? And is that inherently a call on the U.S. dollar as well?
Yes. I don't understand why the world is so enthusiastic about the U.S. dollar. I think in the long run, the U.S. dollar will be a weak currency. Having said that, you see, I can buy now a 10-year U.S. Treasury at the yield of 1.93%. And in Germany, France, Europe, I have in many cases negative interest rates. So because of the yield yield differential, I think that actually the U.S. dollar, provided the Fed doesn't cut the interest rates again, and provided the Fed doesn't introduce negative interest rates, provided all these conditions, I think the U.S. dollar should be okay, but not a desirable currency. And that's why I think the most desirable currency will be gold, silver, platinum, and palladium.
Got it. Mark, thanks so much for phoning in. We appreciate it.